Namaste friends. Welcome to my channel. In today's video, I want to talk about something that is extremely important for all of us: an emergency fund. Having an emergency fund can make a huge difference in how well you are able to handle unexpected expenses or income disruptions. Without savings set aside for emergencies, a sudden car repair, medical expense, or job loss can be financially devastating. In this video, I will explain what exactly an emergency fund is, how big it should ideally be, the best places to keep it, and tips for building your emergency savings fund if you don't have one yet. This information is tailored specifically for people living in India. So, if you want to learn how to protect yourself financially and gain peace of mind by having a robust emergency fund, make sure to watch this video until the end. What is an emergency fund? Simply put, an emergency fund is money you have saved specifically to cover unplanned expenses or drops in income. It's money you can access quickly in the event of an unexpected financial emergency, like sudden medical expenses due to an illness or accident, major car or home repairs, the loss of a job, temporary income disruption, family emergencies, natural disasters. Having cash reserves earmarked for emergencies gives you a financial cushion so that when one of these events happens, you don't have to go into debt or drain money meant for other purposes. An emergency fund helps tide you over during life's surprises, without derailing your finances. It provides an essential sense of security and preparedness. Some key benefits of an emergency fund: covers urgent expenses without needing loans or credit cards, helps you avoid late fees or services getting cut off, enables you to focus on the emergency rather than stressing over money, keeps you from tapping into long-term savings, allows you to maintain good financial habits even in turbulent times, gives peace of mind and an enhanced sense of financial security. In short, an emergency fund is the first line of defense in your financial arsenal to handle unexpected events and challenges. Having adequate emergency savings is considered a fundamental pillar of personal finance. How big should your emergency fund be? Now that you know what an emergency fund is, the next question is, how much should you save in it? How big does your emergency fund need to be for your situation? While there are no hard and fast rules, most experts recommend having 3-6 months worth of living expenses saved in your emergency fund. The exact size you need depends on your specific circumstances. Income stability: do you have a stable job with steady paychecks? Or is your income variable month to month? Variable income means you need more emergency savings. Regular expenses: your emergency fund size should correlate to your actual living expenses. Track your regular bills and household spending to arrive at an accurate monthly figure. Debt obligations: if you have high monthly debt payments, you may need more emergency savings to temporarily cover those obligations in lean times. Dependents: having kids, elderly parents, or other dependents means needing larger emergency reserves. Health considerations: health issues that require regular treatment or medication need to be accounted for in your emergency fund size. Job security: if concerned about layoffs, consider 6 months living expenses a safer emergency savings target. As a general guideline, 3 months living expenses is the minimum recommended for emergency savings. 6 months is ideal for most families and individuals. Go beyond 6 months if you have high financial obligations, variable income, or special health needs. Remember, the exact emergency fund amount depends entirely on your unique situation. Do a thorough assessment of your finances to arrive at the right figure. Where should you keep your emergency fund? Once you've built up your emergency reserves, where's the best place to keep it? Here are some things to consider when deciding where to stash your emergency money. Needs to be easily and quickly accessible: the point of emergency savings is being able to withdraw it fast in the event of an urgent need. Keep it somewhere you can access within a few days maximum. Prefer liquid low-risk options: emergency funds should be in liquid low-risk assets that do not fluctuate too much in value. Popular options are high-yield savings accounts, short-term fixed deposits, liquid funds, and overnight mutual funds. Avoid stocks and other volatile assets: do not invest emergency money in stocks, equities, cryptocurrencies, and other assets prone to big swings in valuation. The value needs to remain stable. Have multiple accounts: consider spreading your emergency fund across more than one type of account to minimize risk. For example, you could split it evenly between a savings account and short-term fixed deposit. Make sure withdrawals and transfers are easy. Test accessibility to your emergency fund accounts. Make sure you can withdraw or transfer to your checking account within a business week. Familiarize yourself with the process. Keep limited cash at home: having 2-4 weeks worth of living expenses in cash at home can be wise in case you need money right away. But avoid keeping your full emergency fund at home as cash. Review accounts frequently. Check up on your emergency savings accounts every 3-6 months to make sure the money is easily accessible and earning decent interest. By keeping your emergency money in stable liquid assets that can be tapped within days, you gain peace of mind knowing it's there when you need it most. How to start building your emergency fund. If you don't have any emergency savings yet, getting started building one up may seem daunting. But with some practical steps, you can systematically grow your emergency fund over time. 1. Set a specific goal. Determine how many months' worth of expenses you want to ultimately save, e.g. 3-6 months. This gives you a tangible target. 2. Review spending and create a budget. Analyze your income and current expenses, then make a detailed budget. Look for areas to trim discretionary spending so you can divert money each month to emergency savings. Every little bit counts. 3. Automate transfers to a savings account. Set up automatic monthly transfers from your checking account to a dedicated high-yield savings account for your emergency fund. This makes the process effortless. Even small amounts like 2,000 rupees, 5,000 per month will add up over time. 4. Use windfalls wisely. Strategically use tax refunds, bonuses, monetary gifts, or other one-time payments to give your emergency fund a boost. Direct them straight into savings. 5. Find extra income sources. Take on occasional freelance work, monetize a hobby, or provide services to generate supplemental income that goes directly to your emergency reserves. 6. Limit withdrawals. Commit to not tapping your emergency savings for non-emergencies. Learning to live below your means day to day lets the fund grow. 7. Remain patient and persistent. Building emergency savings takes time, especially when starting from $0. But small steps done consistently compounds over months and years. Stick with it. With this smart systematic approach, you can steadily work towards having 3-6 months' expenses in accessible emergency savings. It provides tremendous comfort knowing you have a financial safety net for life's unexpected events. Emergency fund tips and best practices. Here are some additional tips for getting the most value out of your emergency savings fund. Start small if needed. Even 5,000 rupees, 10,000 in initial emergency savings is valuable. You can steadily increase it over time. Replenish after withdrawals. If you tap your emergency fund, make restoring it to the full target amount a top priority with your next paychecks. Review target amount annually. Re-evaluate your ideal emergency fund size each year based on changes to your expenses, income, and obligations. Split between multiple accounts. Having your emergency money in more than one account reduces risks related to access or account issues. Keep it separate from other goals. Don't commingle emergency savings with money saved for other goals like vacations or down payments. Automate ongoing contributions. After building up your emergency fund, continue making small automated monthly contributions going forward. This accounts for increases in the cost of living over time. Consider supplemental insurance. Disability, medical, and life insurance can provide an added layer of financial protection alongside your emergency savings. Don't neglect retirement savings. Focus first on employer retirement plan contributions before redirecting money to emergency funds, so you don't miss out on matching funds. With these additional tips, you can make the most of your emergency fund as a robust financial safety net. Benefits of having an emergency fund in India. There are some particular benefits of having emergency savings in India, beyond the general financial security it provides. Helps weather monsoons. Having emergency funds enables people to repair flood or water damage quickly and pay healthcare costs for waterborne illnesses. Covers healthcare costs. Out-of-pocket healthcare expenses are common in India. Emergency savings prevents having to borrow or incur debt for medical treatment. Absorbs income shocks. Many people have variable, seasonal income from agriculture or tourism. Emergency funds provide stability when income fluctuates. Provides independence for women. Financial dependence is an issue for women in India. Having personal emergency savings gives women greater options and freedom. Helps withstand periods of high inflation. Saves the day when high inflation drives up food and fuel costs, which consume a large portion of income for many Indians. Allows entrepreneurship. Emergency funds enable budding entrepreneurs in India to cover living expenses temporarily as they get businesses off the ground. It reduces risk. So, building an emergency fund takes on heightened importance in India, since it helps people weather numerous unique challenges and risks. Having adequate emergency savings truly empowers people financially across the country. Conclusion. I hope this detailed video has provided you with a strong understanding of what an emergency fund is, why it's so critical to have one, how big it should be for your needs, where to keep it, and how to systematically build up your emergency savings over time. Having an emergency fund is foundational to financial resilience and personal well-being. It may take effort and discipline to build, but it is one of the most valuable things you can do to protect yourself and your family from financial shocks and uncertainties that life throws your way. If you found this video helpful, please share it with family and friends to spread the word about the importance of emergency funds. And be sure to like and subscribe to my channel for more money tips and personal finance advice tailored for Indians. Thank you for watching. Jai Hind.